Good morning, Steve here in Chicago with the morning grain comments. Markets are about unchanged, with the wheat unchanged, corn and beans a little bit lower. Stocks are higher, the dollar is higher, and crude's lower. It's interesting that the Wall Street Journal had an article talking about the fact that in the grain room, some of the price decline has been due to more financial issues and managed funds and speculators getting out of long positions as they declined, rather than any key grain fundamentals. First of all, in the beans, I think the market is concerned about China demand if U.S. and China relations decline. Right now, China's having military drills around the entire island of Taiwan, and not sure as to what ramifications that might be, even blockading ships going in and out of Taiwan. The soybean market also, we'll be watching pretty closely the weather over the next 30 days. It's usually the best time in which U.S. soybean crops are made. The GFS model has some dryness in the southern plains and western corn belt, while the European model has normal weather over most of the corn belt. Over in the corn market, again, something similar in that the weather right now, people are focusing on the European model more than the GFS model, concerned about nearby demand for corn exports rather than long-term, maybe a pickup in export demand as Brazil slowly runs out of both corn and soybean supplies to hit the market. Still a lot of uncertainty as far as Ukraine corn exports. Headlines say things are open and ships will be sent out, but the first vessel going to Lebanon certainly has some quality concerns, and so do the other 20 boats that are ready to leave. So there is a question mark there. Also, Russia continues to intensify war, and Ukraine's trying to counterattack in the east. So I think that all those things keeps uncertainty of how much wheat and corn will actually be shipped out of the Black Sea. Wheat market, again, someone is talking about a 20 million ton less export supply, both out of Russia and Europe. But again, market is focused on nearby lack of demand and concern about increased shipments. One crop watcher, one analyst put their corn yield 173.5, showing drops in Kansas, Missouri, Iowa, and Nebraska versus the recent StoneX numbers. So again, those numbers would be bullish, and this particular person is looking for D's corn to make some significant bottom over the next 10 to 15 days, and further weakness end users should step up and maybe add to coverage for 2023. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.